Welcome to the Without the Bank podcast, where you and I are going to talk about all things IBC, the business of banking, utilizing money correctly, and how this will help you grow your business and your wealth. No fluff, folks. You know by now I can't stand it. So today we are going to talk about when can I stop paying this premium? I don't want to pay this premium until the day I die. What are you talking about, you crazy lady? Well, let's talk about it. I want you to pay the premium until the day you die. Yes, that is going to be at least age 121. So you may not outlive it, and that's a good thing. We are so taught that we need to find something that we can stop paying on as soon as we can. So let me ask you, if you were putting money into an investment and that investment said, for every dollar you give me, I'm going to give you $2. Then I'm going to give you $2.25. Then I'm going to give you $2.50. And it constantly gave you more than the dollar you put in. And all you ever had to do was pay $1 because that's the agreement. Would you ever stop putting money into that investment? If that is what your 401k guaranteed you, if that is what your IRA guaranteed you, would you ever stop putting money there? No, you would not. But when it comes to whole life insurance, it's when can I stop putting money there? Even though those dollars are returning you guaranteed cash value to use, you still ask, when can I stop putting money there? That's crazy. If we look long term, why do we want to stop? I never want to stop. No, thank you. I just want to keep putting money there so I can keep getting more back. Short term, it might not be so glorious, right? Because we have to capitalize the system. Long term, can't we figure out a way to keep paying the premium? We don't have to keep paying the premium. I'm not telling you it's required by contract. There are things that you can do that would eliminate you from having to pay premium for the rest of your life. There are policies such as paid up at 65. So we only have to pay premium till we're 65. There are 10-pay policies and 20-pay policies that we only have to pay premium for 10 or 20 years. So here's the difference. If we say we're going to pay life insurance premiums until we're 121 years old, the life insurance company says, okay, this is what it's going to cost you for over your lifetime for that death benefit. If you do it till 65, it's going to cost you a little more every year. If you do a 10-pay, it's even a little more every year. If you do a 20-pay, it's going to be a little more every year. Why? Because you're shortening the time of the payments. It's like saying I'm going to pay for my house over 30 years and expecting the same payment for a 15-year mortgage as a 30. No, that's not how it works. If you stretch it out, the payment's going to be lower. The difference is when we do a 10-pay, 20-pay, paid up at 65, when we shorten it, we have more money going in faster. But then that thing really gets rocking and rolling at year 10, at year 15. At year 30, we're really making some decent compound interest and dividends. And then we say, nope, put the brakes on. We're done. We're not paying anymore because we've been told that we're 65 and we should stop paying for our insurance because we're not working anymore. We sold our business. We don't need to put money in anymore. Really? Would you still put money in if somebody told you they were going to give you $3 for every dollar? You probably go find a way to create that dollar, right? That's exactly what happens in these policies. They really get going and then we stop wanting to put money in. Now we can if we don't have it. But if you're a business owner and you sold your business at 65 or 70, and you did it for sale by owner, guess what? You got money coming in every year. Make sure that the amount of the sale income can pay for the premium. Because if you put more premium in Every single year you get to borrow more money, income tax free for retirement. We don't want to stop paying. You can do what's called a reduced paid up. So let's say at 78 years old, you say, Mary Jo, I can't pay the premium anymore. So I'm done. Okay, we can do what's called a reduced paid up. We can call the insurance company and say, hey, Charlie doesn't want to pay his premium anymore. So the insurance company says, okay, how much cash value do you have? We're going to figure out how much death benefit that pays up. And then they're going to reduce your death benefit. And now you don't have any premium due. Cash value stayed the same, but your death benefit was lowered. So now, upon your death, we didn't really buy that much of a discounted dollar. Our cost of our dollar went up. Here's another way to think about it. If you have a business, you've been there with me, my friends. You know it takes forever to get that business going. It's like 5 years. Typically, it's 5 years before we make any income, before people know who we are, before we can afford the McDonald's coffee. Oh, I remember the pain so well. And now it's up and rolling. And your business is doing good. And you're in 15, 20 years, 25 years. And everything is great. And you say, you know what? This is so good. I'm going to stop. And I'm going to start over. I'm going to rename the business and I'm going to start a new business because this one's going so good. I mean, this is silly to keep this going. I'm just going to start over. What? Who said that? No one ever? No one ever? Because we know the agony of getting that business started. It's like the agony of getting that insurance policy capitalized. We have to go through that period to get the reward long term. And then once we have that reward long term, let's keep sticking that money there. The only people that are telling us to stop paying premium are the ones trying to sell you insurance because they're just trying to make a sale and they don't understand how to teach you what's happening, or the talking heads who think that it's worthless because they themselves aren't educated on what's happening. Why aren't we leaving discounted dollars to our family? Why aren't we leaving some sort of generational wealth? These things are super, super important. If you're going to leave your business to your child or to a business partner, why aren't you going to leave them death benefit to keep that going? I mean, I'm sure I could do analogies all day long on this subject, but I don't think I need to because I think you get the point. So when we're paying for on the policy, there is this thing called a paid up additions rider. This rider buys death benefit for the full cost of that single premium today. It's like single premium death benefit. You only pay once for it. You don't pay over your lifetime like you do for whole life. That is paid up additional insurance. That is why it goes to cash value right away and why we have access to use that cash right away. Because we paid for it. It's done. It's over. We don't need to pay again. Like with whole life, we have to pay again. We have to pay every year until we're 121 because we stretched it out that far. I don't want to say it's super important that you know the technical words and all the insurance language that goes with it, because that's what I'm here for. But it's still important that you know enough to be dangerous so that if you go to another agent, you're not getting a policy that's not suited for maximum growth. And this is what's happening. People read my book and then they take it to their local agent and their local agent says, oh yeah, I can do that. And then I see the policy and it's a 10 pay or a 20 pay or a paid up at 65. And just when everything gets good, we stop putting money into it. What? They don't understand infinite banking. They don't understand long-term thought process, which is what Nelson teaches us. If you're questioning that, read his book, Becoming Your Own Banker. Nelson illustrated in the book, I'm going to pay this up at 65 or I'm going to do a 4-pay for illustration purposes. There are times I may do a 10-pay policy on somebody that's 70. But I'm most likely not going to do it on somebody that's 30 that has their entire life to pay premium and make a ton of money. There are circumstances that warrant those. But if you want a true banking policy and you're 30, 40, 50 years old, even 60, why are you doing a 10 pay, a paid up at 65, a 20 pay? Why are we doing that? If we are just planning to grow for cash value, that person, that agent does not know infinite banking. And I see these wrong because people are saying, well, I don't want to wait to get in to see you, Mary Jo. Well, so you don't want to wait today? So you're going to pay and sacrifice the rest of your life with an incorrect policy? Well, that's silly. It's only 4 weeks. It gives you time to read the book again. Gives you time to read Nelson's book. Listen to the podcasts. Really educate yourself on what you're doing. If your agent says, yeah, I can do that for you, and they don't know what the Nelson Nash Institute is, they don't know what the certification for infinite banking is, they've never read Nelson's book, do you really think they're going to get enough information from my book to be the agent to help you and to help you strategize about how you're going to use that policy? I don't think so, my friends. I don't think so. I've yet to see that. I've yet to see that because guess what? These people come to me and say, can you help me? I got a policy and I don't know how to use it. I got a policy and it's wrong. Can you help me? And I'm happy to fix it. But I can't spend every day fixing something because we're impatient. Make the appointment today and get it right the first time. We want to maximize what we're doing here. We want to think long term. So if somebody is trying to say, oh, I got a great policy, I can do a 10 pay, and you're 35, 40, 50 years old, put the brakes on, my friends. Put the brakes on. Mary Jo said no. I wonder why. This is long-term thinking. This is why we are going against the grain and saying pay that premium forever, because we really want you to maximize what you have. If you have not read Life Without the Bank, why not? It is a super tiny book. Let me look. It is, I should know I wrote the book, right? But I don't know off the top of my head. It is 95 pages long. It is a small book. It is about a 3-hour read. You are going to get the information that you need to make the decision on the infinite banking concept. It is not a book about life insurance. It is a book showing you how life insurance can be a tool to getting away from the bank, retiring with income tax-free dollars, passing on wealth to the next generation. That's what this book is going to teach you. If you have read the book and you've missed that concept, I apologize. And I am happy to help you answer those questions as to why. There's a lot of reasons why. We just need to have the imagination, reason, and logic to see those. If you have not gotten the book and you've not read Nelson's book, get them together. They're a great combination. You can do that at withoutthebank.com. Otherwise, that's all I have for today. I will sign off. If you want to leave me a review for the podcast and leave me 5 stars, just a little hint, 5 stars, I would appreciate that as well. I really want these podcasts to be beneficial to you and be answering questions. So if you want something heard, please email me and say, hey, I want to hear this on the Without the Bank podcast. Because I have 2 of them. So I need to know which one you want to hear it on. So let me know, and I'm happy to go over anything and talk about anything that you want. Okay, you guys, until the next podcast, thanks for listening, and we'll talk to you then.